Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and every Friday at 8 a.m. Central Standard Time, I share my top 5 dividend stocks of the week with my subscribers. My man! Now, this isn't your typical top 5 list you're going to find scattered all over the interwebs because I do my very best to provide my subscribers with a high-quality list of dividend stocks that keep paying quickly growing passive income, all while outperforming the market while doing so.
Sounds too good to be true.
This week, I started with 214 stocks that had ex-dividend dates between May 13th and May 17th. I asked those stocks to have a dividend streak of at least 5 years, and that narrowed me down to 77 stocks. The final filter was requiring those remaining stocks to outperform the market over a long period of time, which brought me down to just 27 stocks, or 12.62% of the original list. Truthfully, this week there were a bunch of really great companies in that list of 27, and I had to do the hard job of narrowing it down to the 5 you'll see in today's video.
But I think it was worth it.
Now, while I know that this week's video is going to knock your socks off, I want to make sure you're using this video as intended. My intention for this video is to provide my subscribers with a source of dependable and quality dividend stock information to be used as a springboard into your own due diligence. With that being said, my intention for this video is not for the information in this video to be used as financial advice or a reason for you to blindly follow a YouTuber and take these videos as stock suggestions without doing your own research first.
That is a good point.
Now, if you agree to use these videos for their intended purpose, feel free to subscribe and ring that little bell so you get notified when these videos and my other dividend related content goes live. And while you're down there, click on that little thumbs up button as it's a free way that you can help me continue to grow my channel and show your support. With all that being said, let's see which stock leads off this week's list. Coming in at number 5 is a stock I personally own, and that's Microsoft, stock ticker MSFT. Microsoft is a quarterly payer in the technology sector, paying $3 per share per year with a forward dividend yield of 0.74%. Microsoft's been paying and growing its dividend over the past 22 years. They have a 3-year dividend growth rate of 10.15%, a 5-year dividend growth rate of 10.2%, and a payout ratio of 22.47%. At the time of recording, Microsoft was trading 5.61% off of their 52-week high. They have an ex-dividend date of May 15th with a payout date of June 13th. And looking right here at this chart, you're going to be able to see the growth of $10,000 invested into Microsoft versus the S&P 500 at the top with dividends reinvested and at the bottom without dividends reinvested. Back up here at the top, Microsoft would have turned $10,000 10 years ago into $121,789.36, where the S&P would have turned $10,000 into $32,512.58. That's a difference of $89,276.78. Down here at the bottom, we have that same 10K, same 10 years, this time without reinvesting your dividends. Microsoft would have brought back $108,026.46 compared to the $29,949.06 from the S&P 500. That's a difference of $78,077.40. And the difference between reinvesting your dividends and not reinvesting your dividends in Microsoft over the past 10 years would have been $13,762.90. With that being said, the stocks I mentioned are going to keep getting better and better. Coming in at number 4 is Cintas, stock ticker CTAS. CTAS is a quarterly payer in the industrial sector, paying $5.40 per share per year with a forward dividend yield of 0.8%. CTAS has been paying and growing their dividend over the past 40 years. They have a 3-year dividend growth rate of 6.88%. A 5-year dividend growth rate of 20.47%, and a payout ratio of 29.8%. At the time of recording, Cintas was trading 4.37% off of their 52-week high. They have an ex-dividend date of May 14th with a payout date of June 14th. In the same chart, we have that $10,000 investment while reinvesting your dividends up here at the top. That would have turned Cintas into $128,995.84. That's $96,483.26 more than the S&P would have brought back in the same time. Down here at the bottom, without reinvesting your dividends, Cintas would have brought back $118,786.88. That's $88,837.82 more than the S&P 500, and the difference in Cintas with and without reinvesting your dividends would have been $10,208.96. Next up is number 3 on this week's list, and that's MSCI, stock ticker MSCI. MSCI is a quarterly payer in the financial sector, paying $6.40 per share per year with a forward dividend yield of 1.37%. MSCI has been paying and growing its dividend over the past 10 years. They have a 3-year dividend growth rate of 23.88%, a 5-year dividend growth rate of 22.05%, and a payout ratio of 38.27%. And this one might actually be within a buying range. At the time of recording, MSCI was trading 24.35% off of their 52-week high. They have an ex-dividend date of May 16th with a payout date of May 31st. And that $10,000 investment into MSCI 10 years ago while reinvesting your dividends would have turned into $125,833.72, which outperforms the S&P 500 by $96,483.26. The $10,000 investment into MSCI 10 years ago without reinvesting your dividends still would have brought back $119,717.92, which outperforms by $89,768.86. And the difference between reinvesting and not reinvesting those dividends was $6,115.80. And quickly, before we get to my top 2 stocks, don't forget to leave a like on this video, as it's a free way you can show your support and it helps me grow my channel. And also, at the conclusion of this video, let me know if you guys own any of the stocks mentioned in today's video and how they're doing for you. And if you don't own any of them, did any of the stocks I mentioned pique your interest? I really do enjoy hearing from you guys in the comments down below if you guys own any of these stocks or if any of them got you excited, so please talk to me down there. But now I really can't wait to show you guys the amazing numbers behind these top 2 stocks, so buckle up. Coming in at number 2 this week is KLA, stock ticker KLAC. KLAC is a quarterly payer in the technology sector, paying $5.80 per share per year, with a forward dividend yield of 0.83%. KLAC has been paying and growing its dividend over the past 15 years. They have a 3-year dividend growth rate of 15.72%, a 5-year dividend growth rate of 12.89%, and a payout ratio of 20.26%. At the time of recording, KLAC was trading 4.47% off of its 52-week high. It has an ex-dividend date of May 14th with a payout date of May 31st. And these numbers are quite frankly starting to get ridiculous. A $10,000 investment into KLAC 10 years ago while only reinvesting your dividends since would have brought back $171,635.65, which is a measly outperformance of $139,123.07 over the S&P 500. The $10,000 investment into KLAC 10 years ago without reinvesting your dividends still would have brought back $118,879.69. That still outperformed by $88,930.63. But the difference between reinvesting your dividends in KLAC and not reinvesting your dividends was $52,755.96. I'm pretty sure that's the biggest ever. And here it is, guys. My number 1 stock of the week is Wingstop, stock ticker WING. Wingstop is a quarterly payer in the consumer discretionary sector, paying 88 cents per share per year, with a forward dividend yield of just 0.23%. Wingstop's been paying and growing this dividend over the last 7 years. They have a 3-year dividend growth rate of 17.06%, a 5-year dividend growth rate of 20.12%, and a payout ratio of 21.27%. At the time of recording, Wingstop was trading 1.88% off of its 52-week high. It has an ex-dividend date of May 16th with a payout date of June 7th. And here's why this one actually took the cake. So Wingstop doesn't have 10 years worth of history, but they're very comparable numbers-wise to the stocks that I mentioned that did. So Wingstop over the past 8.9 years with your dividends reinvested would have turned $10,000 into $176,820.12. That's compared to the S&P turning that same 10K over the same 8.9 years into $28,590.24. That's a difference of $148,229.88. The $10,000 investment into Wingstop 8.9 years ago without reinvesting dividends would have still turned into $134,151.70. Again, same time frame, same requirements for SPY without reinvesting your dividends. That would have brought back $26,703.57. That's a difference of $107,448.13. And the difference between reinvesting your dividends in Wingstop and not reinvesting those dividends was $42,668.42. Personally, I'm more of a Buffalo Wild Wings guy, but these numbers make Wingstop taste pretty delicious. And just like that, you just saw my top 5 dividend stocks for the week of May 13th through May 17th. Don't forget to let me know down below if you guys own any of these stocks and how they're doing for you. And if you don't own any of them, did any of the stocks I mentioned pique your interest? And as always, if you happen to miss this video when it was released and the dates I mentioned in today's video have already passed, don't worry, there are 2 things you can do.
Gotta write this down. Gotta write this down.
You can simply remember that the stock market opens at 8:30 a.m. Central Standard Time and that these videos come out 30 minutes before that and show the best stocks for the following week. And in order to get a jump on some of the great stock ideas, you need to find that one guy on YouTube that puts out those awesome lists.
What are the other options?
Or you could just subscribe and ring the bell so you get notified when these videos go live on YouTube, if that sounds easier.
Why didn't you just lead with that?
Before you go, make sure you did your part and click on that like button to show your support for the channel. And YouTube thinks this video is essential for you to watch next. But until next time, see ya.